loan.
You had to
All
have
right,
an
guys.
SBA relationship before.
We are live. I am here with Jacob and Chris. How you guys doing?
Pretty good.
Great. Reading through paperwork on a Saturday. It's a
Yes.
fun day.
Yes.
Yeah.
Saturday, March 28th, and the day after the CARES Act passed. And so accountants across the country are spending their weekend reading a 900-page bill, or getting, like me, the lazy accountants are getting summaries from other people and using those instead. Smarter people than me. So I'm here with Jacob Schroeder and Chris Macksey. Hey, why don't we quickly give the kind of the firm you're with, or the firm you own, and the state you're in, because we didn't do that yesterday. So Jacob, how about you?
Yeah, I run Ascend Consulting, and we are based in Ohio. Virtual firm for the most part, but also have a physical location. Do taxes, accounting, and a lot of hiring consulting for clients.
Great. Chris?
And my company is called Prefix Accounting, and we are now a remote firm. We work in the hospitality industry, specifically with small boutique hotels and restaurants and small restaurant groups. And we do bookkeeping, accounting, advisory, and POS implementations.
Oh, great. Yeah. And I know you guys are in the thick of it with the restaurant and hospitality clients you have. So lots of prayers and thoughts to Chris and his firm right now, and the great advice you guys are giving. You guys must be working tirelessly the past 2 weeks. And I'm Michael. I'm a CEO of Reconciled, online bookkeeping firm. And I feel like I've been doing a lot of webinars about remote work for the past 2 weeks, with the amount of companies going to remote work, and surprised to learn how many are still not prepared, and how many don't even know how to use Zoom, which is amazing to see. Yeah. So Jacob, why don't you kick it off with just another summary about the disaster loans, relief loans, the CARE Act, some kind of a summary that would help our viewers. And then Chris is going to jump off with some advice related specifically to restaurants, hospitality companies that maybe are shut down now or on a skeleton crew doing to-go work. What maybe generic advice Chris and his firm is giving to their clients?
Yeah, so obviously right now we got a couple different loan options with the CARES Act being passed yesterday. There's a disaster loan that has been discussed a lot this week. That one, then there's the SBA 7 payment protection plan loan, which is different than a conventional SBA 7A loan. So when you're talking to people, sometimes there's confusion around that of, is it a 7A loan or is it a payment protection plan loan? And then in addition to those two, we have the lesser known ones, which is, there's actually a grant out there. If you're applying for a disaster loan, it's called the Economic Impact Disaster Grant. And that one basically gives you $10,000 when you submit your disaster loan. That way you have some cash to float until you could get that loan. Also in the disaster loan program, there are what they call express loans. And these are for people who already have a relationship with an SBA lender, and that is their bank. They can go and get an express loan for up to $25,000 much quicker and faster. Then as they move into the full disaster loan process, if they need to, they can refinance that debt into the full disaster loan on that process. So there's a lot of different options in there, right? And they each have their pluses and minuses. Really gets down to, what are you looking to do for your company, and what's the needs of your company? How many employees do you have? What's your payroll like? That's going to determine, okay, in a disaster loan, it's kind of based upon economic impact and how much you need. Payment protection plan loan is based upon 2.5 times your average monthly payroll cost. And monthly payroll cost is defined in the bill. It's a little broader than many of us think, because it does include things like retirement contributions, health insurance, sick leave. Some of those things go in there as well. You do have to watch, if you're using the new Family First Act, how that the credits for the sick leave and family medical leave play into that calculation, because they impact that calculation if you're using those. So just be aware of that when you're looking at what your payroll cost is. It's not just what you paid in wages last year.
Jacob, one of the thoughts that I had about the employee protection or the paycheck protection program was whether or not it can be combined with the Family Leave Act, and whether or not you can use the sick time that's being awarded for the coronavirus and have that be forgiven, because that would potentially give you more runway.
Right. You cannot do the credit and the loan together, right?
Right.
So that is a definite there. You can't do both of them. You actually have to exclude those when you go to get your forgiveness back.
Mm-hmm.
In that case. So there is an exclusion there that says if you're getting the credit, you cannot get forgiveness for that at the same time. Or if you're getting forgiveness, you can't get the credits. So you are going to have to make some operational decisions about how to handle that in looking at your forgiveness potential.
Yeah. So,
but you could use that for the family leave though, and have that be forgiven.
Yes.
Right.
Correct.
Right.
Yes.
So
it's which one do you want to do, right?
Yeah. So to give a quick summary, like you said, Jacob, you've got based on your state, you got potentially some state options, right? Especially for restaurants, retail stores, things that shut down. There's some states that literally have raised the money and said, let's help these companies because they were more impacted than other states. So putting those aside, you've got this grant. I think it's like up to $10,000.
Mm-hmm.
You have SBA Express customers who can get a $25,000 SBA Express loan or access to one, right? And that's to bridge you to the disaster loan. You have the disaster loan that has right now a 3-week turnaround time. That's what they're saying, right? And 25,000 or 30,000 applicants in backlog. And that's up to $2 million, low interest, has nothing to do with forgiveness in it. It's basically a low interest loan, up to $2 million, very low interest rate for-profit and nonprofits. And then you have this new CARES Act bill, which went into effect, but the application process and the guidance hasn't been released by the SBA. So therefore, you can't even apply for it yet. You can only get your documents prepped. And basically the same documents you would get for the disaster loan are similar to this relief loan, except the relief loan is based on payroll. The total amount you want, that's part of the payroll protection program. And then the SBA has their own set of just regular loans they always give out, which they can point you to also if you don't qualify for any of these other loans or other grants. They're in the first 4. And so did I get that right? Kind of a quick, that's the order of the things that have come out, from small to big, right?
Yes.
And the relief loans is up to $10 million. And for people who are defined as small business in the CARES Act, which is 500 employees and under, and there's some special circumstances for per restaurant or associations, franchises, blah, blah, blah. But there's kind of the 4 things. One of the advice I've been giving to clients is if cash flow is not an issue for you and you can wait to apply for the relief loan and you can wait the time period to get that money and rehire your employees when you do, go ahead and wait for the relief loan because the payroll forgiveness is in it, even if it's partial only, is so good and beneficial for you. And the interest rate is still very low. I think it's 4% on the interest rate.
Yes.
Prime plus 2.75%.
Yeah, so it's pretty low. Plus, it's got a 10-year payback period or 7-year. 10 year. So that's a great loan. That's a great SBA loan. Set aside the other loan, these disaster loan, everything else. That's a great loan compared to the current SBA loans out there. That if you can hold out and wait, then do that. And I'm telling clients, look, make a cash flow. Don't make cash flow decisions based on whether you can get this loan. Make cash flow decision whether your business is currently operating. Right. And if you need to furlough or terminate employees right now to continue to operate your business, then do so, because you can still apply for the loan and rehire those employees, and you will not get penalized for having done that. So that's kind of like the advice I'm giving. I want to know if that's maybe the same or a little different than what you guys are telling your clients. Like Chris, I'd love to hear, what are you telling restaurants that are closed or on skeleton crews? What kind of is different there?
So I think that most of, across the restaurant industry, we've seen that a lot of restaurants have just furloughed workers and did so in pretty quick fashion. Tom Colicchio, Danny Meyer, Jose Andres, like they've all laid off like huge swaths of their workforce at this point in time. And most of my clients have laid off their workforces as well, leaving it just to management staff. So right now they're all already laid off on unemployment. That's already been set up to them. But I think that what is probably going to be our advice is to go with the paycheck protection program, so that we can get people back on payroll and making more money than what they would be making on unemployment, which is more of an HR decision than necessarily, it's a people decision. It's not necessarily an accounting decision. It's retaining that staff, making sure that they don't leave the hospitality workforce, keeping them and making sure they don't get picked off by somebody else, and keeping them happy. I mean, a lot of restaurants are families, and so to have to lay off your fire your entire family is like heartbreaking for them.
Yeah, Jacob,
I think that's a really important thing, Chris, though, is there's always the dollar and cents decisions, but in times like this, it doesn't always mean that's the right decision, right? Sometimes you have to look at the holistic and what's the right thing holistically to do. And making that decision is a little bit more of a mixed bag, right? And how you leverage unemployment, how you leverage sick pay, how you leverage FMLA, how do you bring these loans into play in your holistic, what do you want to do as a company, and what's the culture of your company, and what are your values and who you are? I think it's important to look at. For so many accounts, it's easy to say, well, dollars and cents wise, this is always going to be what makes sense. But I really love that Chris said that about, we're making some people decisions instead of just dollar and cents decisions. The things I caution you with the forgiveness program is obviously, I'm going to just put it out there. Anytime you take a loan with the expectation of paying it back, right? Don't take a loan with the expectation that it's just going to be forgiven and it's free money, right? Yes, it's easy to look at it that way, but also think through the implications of if something would happen and the calculation for the reimbursement, we don't qualify for a total reimbursement and we are stuck paying some of this back, because there is exclusions in there. There's limiting factors on the reimbursement. If you're not retaining your staff, is the big one in there. So just be aware of those and understand those, and understand when you're going for a loan, you are going for a loan. And then whatever is forgiven is a great benefit here. And that's where I think it's really important that Chris says we're doing the right thing from a people standpoint. And that's what they're committed to, right? They're committed to their people. And that says a lot. On which one's the right one? Many of our clients, it is that payment protection plan for multiple reasons. One, the potential for forgiveness. I mean, you can't ignore that. Two, it's speed to funding. It's looking like, since all the SBA lenders out there can issue those funds without waiting on the SBA approval and that side of things, we should have access to capital a lot faster. So from those standpoints, that is kind of where we're looking at. There are some cases that we are considering disaster loans, maybe in your real estate companies, which are taking a really large hit from lost rents, but really don't have that many people on payroll. So their loan would be fairly small, yet our economic impact is really large, right? So we're looking at some of those and saying, the loan from the payroll side, and if we go back to last year's tax return, rental companies, we're not pushing a lot of net income to the bottom line because of the way depreciation works and all of those type of things. So even though under the SBA 7 payment protection plan, sole proprietors and those things would qualify, the loan amount just wouldn't be that large compared to the economic loss they're seeing, where they just had, 20 commercial units decide not to pay rent this month. that economic impact is much larger, which then the disaster loan is a lot better fit for us to be able to keep us going. And now, granted, the good news in that is we've been able to defer a lot of the mortgage payments on those, which buys us time. But to be able to get that disaster relief loan in, which is good because it has a little longer runway. But that's the times we're looking at those disaster loans, is when you have low payroll. The other ones where, companies that outsource the majority of the work
Right.
to other companies. Okay, we may have a lot of loss in revenue, but we don't have a lot of payroll dollars. So if we don't have a lot of payroll dollars, the payment protection plan isn't going to cover my payment to my contractor. It's not going to do any of that. It's also not going to replace the lost revenues in. So from that side, it gets a little messy.
I did see in one piece, and I haven't gone through the bill because I don't have that time. But in some of the lobbying notes that I read, that if there was a very strange bit of verbiage that was saying that if it is the independent contractor's sole source of income, that you could use the paycheck protection. But that's a very strange way to determine that.
Right.
And how do you actually know
Right.
they're an independent contractor? But I saw that, and I don't know what the guidance is going to say for that, but that was a weird asterisk.
Yeah. Yes. Well, and then you also kind of out them. You kind of out them, and the state goes, "Well, wait. If you just declared this person and they just said they're the sole, you should be an employee." You just outed them. You just kind of passed this rule. Yeah, it's kind of funny. One of the guidance I'm giving to clients is, first off, if your business breaks even or actually grows this year after all of this, first of all, feel blessed and lucky, right? You are in a kind of business that is protected. And frankly, these loans, these stimuluses really weren't for you. They weren't made for you. They were made for these companies that are just really, really hurting. And secondly, there is a limit on how much money there is in it. It's not like there's an unlimited amount of pool of money. So you should figure out how to operate regardless. And if you want to get a loan, like you said, be careful. It's still a loan at the end of the day. And you want to think through that and how it affects your balance sheet, how it affects what your balance sheet looks like in the health of your financials. Okay.
Yeah.
And so
something on that
really,
point,
really
Michael, I want to jump on that. Be really cognizant is if you have other debt and you have debt covenants that you have to meet, you're really going to have to watch your debt covenants, because you are bringing additional debt on your balance sheet. And yes, it may be forgiven, but between now and when it's forgiven, you may be out of compliance on your debt covenants. And what is the repercussion for that? Or if it's not forgiven, what are the repercussions on your debt covenants? So you have to think through those things, because it's I think I can make it, but that money would make me breathe easier. Well, if you go out of breach of your debt covenants and the lender's like, you got to pay now because you're in breach of debt covenants. Now you just killed your business.
Right.
On the hope of having a little bit of comfort. Right.
Right.
So just be aware of that side.
Yeah. So that's really, really good advice. So Chris, love to hear also your, as best you can, we know obviously the short-term impact has been drastic for the restaurant industry and hospitality and retail. What are the long-term impacts, do you think, or can you forecast, crystal ball, nothing specific, but what long-term impacts do you think this has for the industry?
So
what are the long-term impacts?
I don't know if you saw the interviews that Tom Colicchio has been doing, but he's a very prominent chef from New York City, owns Craft Group, and he has been talking about how the longer that this occurs, the higher that percentage of failures becomes. And we're looking at that in terms of weeks. I mean, really robust restaurants can last maybe independent restaurants can last maybe 2 months, assuming that they have a line of credit in place, assuming that they have financial backers that have some deeper pockets, because the overhead is just really high. I mean, for most restaurants, 10% of their cost is occupancy costs, at least. And in some of those like Manhattan, San Francisco markets, it's even higher than that. And so even with them closed and not having any income or any payroll costs, really, they still have a ton of costs that they have to shell out. And with every week that goes by that they don't have any revenue coming in or any sort of financing, any sort of cash, 10%, you'll probably lose 10% of those independent restaurants with each week that passes by. Wow. I know that I've had restaurants that have closed, that went to delivery, and then the delivery didn't work, so they just shut it down. And now they're just like in cash, strapping cash mode, and they won't last very long if that goes for another 4 or 5 weeks.
Yeah, and if you didn't already have a very robust to-go operation, right, where it was 50%, 40% of your revenue, to expect a restaurant doing 5% to go on revenue to all of a sudden overnight become, get to even 75% revenue on to go, like to equal 75 of the previous revenue, is kind of an impossible thought, right? Because you've not built that customer base that said, oh yeah, this is great to go food. And
if you're like, if you don't have a point of sale that's in place where like you can order everything through this phone, it is not going to work for you. There are restaurants out there like Canellis that's out of Seattle that is like, they shut down their full service restaurant, Michelin star restaurant. They converted it to 3 different concepts, and delivery, drive-through, and brochure. Like,
oh my gosh.
They have deep pockets.
Yeah.
You don't have an investor backing that allows you to do that quickly. Like, they had their website redesigned in like 24 hours. It was impressive.
Oh my gosh.
Most people can't do that. And so like, unless they have a modern point of sale that allows them to like order online, like sync stuff with their point of sale data from their website, it's going to be such a small amount of money that it's not going to be worth it.
Yeah. And I think that's some of the long-term ramifications in that industry, in the restaurant, retail, hospitality industry, is the continuity plan that everyone now wants to come up with, because no one knows yet, is this a seasonal virus? Will it come back in the winter? Will we be back in the same situation? So there's the continuity plan around, okay, and what they're saying about the vaccine not really going to come until next year, so 12 months from when we found out. So that would be like in the middle to end of next winter. It won't be by the fall, as far as I understand. So the continuity plan of all restaurants going, can we be nimble like that? Can we figure out a way to be nimble like that? And that maybe the companies or service providers that will come along and say, we want to help you get nimble like that. We want to help you figure out how to do that. That I think has some long-term interesting innovation that may occur in the restaurant industry, so that if something like this hits again in the short term, they can quickly shift. I mean, I think I know that basically companies that are operating remotely right now, they're probably already thinking that and implementing remote work policies, implementing quick turnaround, backup, equipment that everyone can have now at home. I was kind of joking with people, like, you're going to start seeing pandemic in a box kits being sold to businesses and to homeowners. Your ventilator, your respirator, your hand sanitizer, your bottle of alcohol, like all the backup you need for a month, right? Just like in a box sold to you and you put in the garage. I could just imagine those kind of things getting set up.
We're gonna see Instagram sponsored products in the next week.
Oh, sure. Easily,
Yes.
easily, yes.
But no, it is interesting to start thinking about what our new normal will be, right? Like, even when we come out of this, if it goes on for how long, and I really think this impacts the restaurant. Like, will people want to sit beside a stranger that's 4
Right.
feet away? Or what will that adoption be? Do we need to redesign our restaurants? And then, okay, these restaurants are already cash strapped coming out of this. You know, if they
Right.
don't have the deep pockets, as Chris was saying, can they pivot even the ambience of the restaurant? Can they pivot and serve clients and customers in the way they want to be served now?
Yeah.
How much does it change when we are so used to working remotely now and we want to go out to eat? Do you expect to order beforehand and just show up and eat? I mean, like,
Right.
what are those things that change? Like, yes, I might want to sit in the restaurant in the ambiance, but I no longer want to wait. I want to be able to order it online and it be there. You know, I'm reserving my reservation and saying what I want to eat at the same time.
I've yet to see the restaurant that's created a virtual experience right now that's offering,
Yeah.
hey, can you create a virtual, whether it's virtual 3D or just Zoom experience that any family could jump on. You've maybe sent us the food ahead of time, right? For the 6 o'clock virtual experience or 7 o'clock, you've delivered to our house, or you sent us the ingredients. We cooked it because we hoarded all this food at our house anyways. You showed us how to use toilet paper in our food, whatever. You did all that. And then, and then you basically curate this virtual experience. I've yet to see that innovation happen, which would be very interesting. Or,
Right.
I mean, I'd love to see for any restaurants watching, I'd love to see a webcam in the kitchen of the to-go staff that are doing interesting things. And why don't you give us an experience of how the to-go staff are keeping the kind of the food economy alive, right? That'd be very interesting, just because it's like people are watching stuff right now, and you can just show your operation.
And people are more concerned about cleanliness.
Yes. Yeah.
They're concerned about cleanliness, right? Like, we're willing to show you that our kitchen's clean, that we're doing the proper precautions. We have no problem with you watching us. Those people that are concerned about this, like, all of a sudden, like, they'll probably only watch for 2 minutes and they'll be like, oh yeah, we're good. But they can do that, and it gives them that comfort level, right? It just changed that experience completely. I know that terrifies probably most chefs of having a camera.
Have you ever heard of the website Yelp and looked at their reviews?
Yeah, the health reviews. Yeah, the health reviews. Oh yeah. But yeah, I mean, imagine Yelp adding a video or webcam component, or to the kitchen, right? Just so you could see that. Right. I mean, it just be very interesting. So anyways, this is all conjecture, and but this has been great. This is a great summary, guys. Any other final thoughts on? I know I'm getting texts and emails after the bill got passed yesterday of, okay, what to do next, right? So if you were to give like the one or two things of what to do next, I'll say, go talk to your bank, go talk to your banker. If you see stars in their eyes and they are glaring and they have no idea what you're talking about, they do not know, if they can't even give the quick answer of, we've yet to receive guidance, we have some, but let's get some documents prepped for you. If they're not doing any of that for you, my recommendation is go find a different banker, or go find a different partner or lender. That's one or two things that you guys would recommend, Jacob and then Chris?
Yeah, I'm agreeing with you, Michael. Find a lender, have one prepared and ready, know who you're going to use, start building those relationships now. And then start preparing documents together. You can go out there and see what the basic documentation is. Obviously, if they're going to base this off of payroll, if you're going to go the 7A loan, they're clearly going to want payroll data. Start compiling it, right? We don't know exactly what format they're going to want that in yet, but know you're going to need to be able to access your payroll data. Can you get on your payroll provider? Is that your accountant that's doing it? Who's doing that? And how do you get those records? And make sure you have quick access to them, because that's going to be a critical piece of this loan for sure.
That's great.
Yeah, I would say the other thing to do with that is to make sure that your employees are aware of the programs now and get ahead of that, because if you're going to be doing the SBA loans, if 2/3 of your workforce is going to be caring for their family, that's a much longer runway that you have than if you don't have anybody doing that. And that's really going to change the cash flow scenario for you and how long you're actually going to be able to last with that SBA loan.
Yeah, that makes a lot of sense. Yeah, and I think that's one thing that most companies have not done yet is, do they know how many people in their company is going to be taking these FMLA COVID-19 section of it, so that they can take care of their kids. And states have now started declaring kids are not going to go back to school So states have slowly, Vermont called that. I know other states have called that already. They're not going to go back to school at all this school year. So, there are some challenges that companies are having, and they will be, if you're not actively transparently talking to your employees, they're going to be surprised on April 1st or 2nd when you get the notification from that key employee that you thought's going to stick in because they've sticked in for the past few weeks, that nope, their spouse is pressuring them to take the time off because their spouse maybe is a nurse or a doctor or on the front lines and can't take that time off right now. And we need them, taking care of the sick.
Yeah, there's no benefit to delaying that conversation.
No, you might as well do that conversation now. Then you can do some scenario planning on what you need done to fulfill. So, well, great update, guys. We'll looking forward to talking to you on Monday.
All right. See you
See you
later.
guys.